Okay, so let's see how far the second session can take us to. Um, good. So we have today we're talking about precision. We're talking about precision support resistance today. So we've defined what it is, and now we want to be able to identify how to draw precision support resistance. And we are saying that the first thing we need to look at is to better start to view it from a top-down analysis perspective, like try to locate that on at a higher time frame, and then we can bring them down to the smaller or lower time frame. The other thing we would like to do is to also monitor to get this at in a ranging market or consolidation. So we will do that example also for us to see. And then also within a swing range structure, okay, and then also where price has impulsively moved or been distributed. So let's go to Euro USD. Let's go to Euro USD. This is Euro USD on the weekly time frame. Okay, this is Euro USD on the weekly time frame. So let's just do this exercise right now. Now let me just clear all these things. Okay, so just look at Euro USD. This is weekly time frame. So let's try to do this from this data. So this data is around 2010. What is happening here is, yeah, it's 2010. Yeah, 2010. So let's see. So Frank, this is back testing, right? We want to look at the data as far as we can go.
Yes. So
So
please, that means history plays a very important role
yeah,
in
it's the
this
history
process.
that we do the educative guess or educative anticipation based on history, historic data. That is the technical analysis. We use that as reference points. So psychologically, if something had happened at this level, it's likely in the future it could happen there under the same circumstances, though it's not like 100%. Okay. So if you look at the chart clearly like this, Uchenna, can you tell me what you see? So are you seeing what I'm seeing? For example, the one of the conditions is look for a range. So I'm seeing here as a range. Are you seeing that too? Are you seeing where I've colored yellow as a range?
Yes.
Good, good.
There's a challenge. The chart that I'm seeing, like the pattern of the chart I'm seeing in is different from the one that you have.
I am on Euro USD weekly time
Yes, it's
frame.
Euro, yes, it's Euro USD 1 week weekly time frame I am as well.
Yeah,
But
I
I'm not
just
sure.
went back to like 2009, 2010, 2012, 13, 14, up to like 15.
Oh, okay. I
I'm
went
back.
back as far as 1990 something. Okay, okay, okay.
I'm
So let
back.
me get to
Uh,
where you are. 2010.
That's
Okay.
where I've shaded right now. I think it's 2009 to 2015.
Okay. Yeah. Okay. Yeah.
Good. So if you look here right now, you can see that price is ranging. Why is it ranging? You can put this zone that I have shaded into up here like this. You can draw lines, a line here. You can also draw, like, let's say where the blue line is. Okay. But so normally the way I will approach this is I will look at, price was descending from up, right? It first came from up to down like this. Can you all see that? First came from up here and then drop down like this. So the way that I would do it is I will first look at the first hit, okay, where price hit first when it dropped. Okay, I'll take that. So let me put this blue line. Let me make it black. And then let me make it little. Good. So I'll put this here like this. So you see this place. Good. So from up here, that is where price hit first. Then from here, it now went up and refused to go above this area. Like refused to go. So it hit here. And then since then, we have not been able to go above that. So how will you know that this place is acting as resistance? Okay. You will know by 2 or more touches. If price hits there and rejects or doesn't hold or reverses like twice, first, second, then you can see that this place has something. Okay, so one, the first hit was here. Let's say price. So you could even see that price first reacted down here and it pulled back up into this area. Okay, because if you look at it well, you see that the high of this bullish candle got here and then rejected off. Okay, so let me make it like this. Good. So this is it. Okay, and then from there, price dropped here. When it got here, the move that it made to the upside, it went straight. Uh, it went straight from here into here. Can you all see that? Can you all see that? It went straight from down here into here. Now, when it hits here again, what happened? We see rejection. Okay, on this weekly time frame, rejection from here straight and price closed here. Then another candle open, moved up, it came down to close. Then the red candle open, moved up, it didn't even get there again and closed. Now, this is an engulfing pattern. The red candle came down at par with the last green candle, and then the next red candle that opened was bearish, and it overshadowed and took all this activity. So up here we can see this as an engulfing pattern here. Okay, and then from there it moved down back. So when it came back down, so observe it closely. When it came back down, it hit here, the black line again. What happened when it hit the black line? So let's say even for the first time, let's say we didn't know that this thing that happened here will hold another time. But the second time that price came to the same black line, what happened? Study this place. What happened here? So we see hit, reject, hit, reject, hit, reject. We see a doji here. This candle is an engulfing candle. It engulfs both the doji and the red candle and close. And the next candle, boom, went up, retested, and also went up again. Do you get it? So now we have 2 touches on this black line, and price has reacted. So what can we say? The reason why price hit here and went up is that there are buyers sitting here. I hope you guys are following. Buyers sitting here.
Yes, please.
So buyers are sitting right on the black line. Okay, so, and then what is the reason why price sold here or hit here and rejected? It hit here first, engulfed and came down, hit second time, came down. What is the reason? Sellers are here. So this is a ranging market. Okay. Sellers are here. Okay. Now, so we've marked that and we've seen two touches here. Sellers bring price down. Two touches here, buyers take price up. Now, price goes up, 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 and hit the same place again. Now, when it hits the same place again, let's observe closely what is happening here, up here. Observe closely. Look at what is happening here at the yellow area. So, one, you can see that the is it green color or this one, this horizontal this rectangle is green, but it has an upper edge and has a lower edge, right? So this becomes a zone. So this the normal way of drawing support and resistance. But this zone is too big for me, and I might not be able to get the precise place where price will do might give me the move. Okay. Though I can use other concepts to be able to catch that move, I want to be able to catch that precise price even within the rectangle, the zone, the support resistance zone. Okay, so instead of me using this zone, what I want to do is that I want to look at exactly where is the PPT? Exactly where price has impulsively been distributed off, where price are taken off from. And how do I identify that? You can only identify that with the body of the candle. Forget about the wicks. Okay, so forget about the wicks right now. Where the body of the candle, okay, the body starts that took price or brought price down. Pay attention to that place. So let's say, for example, we are taking this rectangle off. Where would we target for that place? You see this red candle, exactly where the body is. I put my line there. Let me color it red, blue, and let me make it big. Have you guys seen this place? I mean this place. Here. Okay. Exactly where the body took off from. That is the line. That is the price. So now I want to now observe exactly what happens there anytime price is below or above that exact line. Right from even back here, I could see that blue line, when price was from here, it hit it. There is a green candle in the middle here that took price up. Price hit the blue line again. The next red candle, this one, closed below the blue line. Now it came down. We had a push to the upside. Then this green candle hit the blue line and went up to this place. but it rejected and came to close below the blue line. After that happened, we saw the big move with the big body. This is what we are looking for. So the indication is this red candle here. You see the close below the blue line. That is the indication. Now, the rate test or corrective is price comes now, but it comes back to rate test that same place or line. Then now you look for rejection and engulfing again. So as long as price keeps rejecting, and on the smaller time frame, let's say 4 hour, you see engulfing pattern, break of structure below or around this blue line, you are good to go. Are you guys getting what I'm trying to say?
Yes.
Perfect. So now this one has happened already. So what happens here? Rejection and is below. It's not above. It rejected but did not close above. If it closes above, we are not done. We are not okay. It closes below. The indication is this. The corrective or rate text is this. We see rejection. We see a close below. Then you wait for engulfing. And the key point is as long as price is below the blue line, look for sales. As long as it stays, it's your stop loss is when price closes above the blue line. If it even goes to the blue line and you are in a loss and it has not closed, you can hold the trade. Okay, so this candle opened. What?
Can I ask a question?
Yeah, come in.
Oh, okay. So the engulfing now that we are looking at to have before we take an entry, like we're doing this analysis on weekly time frame. The engulfing candle, does it have to be still in like weekly time frame?
No,
I'm just
no.
thinking of, yeah. Okay.
It's because we are back testing here.
Okay.
This is back testing. That's why you're seeing it like that. But what we will do here is that you mark your line down, and then you would have to monitor either on 4 hour, 1 hour, 30 minutes for the internal structures and the formation of a bearish move. Okay.
Okay.
Yes.
So we'll go down to the time frame after marking.
Yes. So your confirmation is, you see, what will let you hold the trade is when you see that the weekly candle has closed by engulfing all these things. This is your confirmation that you are in a sell. You are selling, and you are selling to the next. We didn't know that price will reject here, so probably we might use the history again to see if there is another important reference point that we can find below here. But at the end of the day, our immediate take profit for if we are selling here is to sweep these lows because we are bearish from up. So we expect lower lows, lower highs. We expect a new lower low to be made. So our take TP1 is at least for a low to be made. And this candle has given us that low. Have you gotten it? So at least that is what we are looking for the first trade. Then for me, as long as we don't come to close above here, you are good. Keep looking for trades and know that always price will come back also to retest. So let's see. Price does what it wants. Let's say you even miss this trade, but price does what it wants to do, and then it comes up. Then it hits here again, reject. Okay, you see the rejection hit. There is no close above. If we go to 4 hour, we might not get this history of price. Sometimes when I'm on a smaller time frame, I can't get enough of data from past action. So, but as we keep going, we will get into the smaller time frame for you to see. But what I'm saying is that price comes up, the moment it hit the blue line, it started rejecting. So once you start seeing the weekly time frame rejecting, you move to daily, you move to 4 hour, you move to 1 hour, and start to see if there is a break of structure happening, a bearish break of structure. That is how you can catch the trade early before even the weekly time frame will fully reject. Are you getting my point, Uchenna? Great.
Yes.
Good. So now we know that at below this line, there are sellers here who are pushing the price down. Okay. We know below this line, we will sell. But the question is, what about if price goes above? Okay. Because what we are looking for is we are looking for an opportunity for one side to be weak so that we will take advantage of it. That is the edge. So what happens if the sellers becomes weak? And how do we know the sellers are weak? That's why I want us to study here. So when price came back again and got to this place, let's monitor. See this candle. You see how it is big? This one. When it's getting close to the blue line, it was getting close to the blue line. This candle was big. It shows bullish activity, bullish momentum coming up. Okay? Because you want to see that the bullish momentum is getting weak so that you want to sell below the blue line. Now, it comes up. That's why you have to observe. The next candle closes above the blue line. It did not just reject and close below. At this point, there is no need for you to be looking for sales. Are you getting my point?
Yes, please.
Perfect.
Yes, I am.
Why are you not going to look for sales? Because we don't have any indication of a sell yet. But we have an indication for a buy. So here, the next candle went up, it rejected, came to hit the blue line. Then the next candle, which is the bearish candle, faked coming down, closed below. You see, the body is below. So what is the meaning of this? I always say it. The intention of this pattern here is that the market is telling us that I have intentions to buy. Then off after the next weekly candle, which is an indecision candle, it is now telling us that I have intention to buy, but now I have intentions to rather sell. You need to observe this around the precision support line. Close above, close below. That is the message is telling you. So if you are looking for buys, we understand. But know that after the buying, or no matter, we don't know how far the buy will go. That is why we are not only using this precision support concept for the trades, we are adding other things that will give us a better risk to reward or better trade. But at this point, it just gives us an idea for a direction. I hope you guys get it. Good. So it tells you that I want to buy, but this doji is indecision on the weekly time frame. And now it tells you I want to sell. Now, for me, with the knowledge I have now, it will be in my mind that one, I'll first be looking for buys. Then later, I will look for sales. That is what this pattern here is telling. These three patterns, that is what it's telling us. So, because of the indication to buy and this momentum preceding that indication here, anytime price is above the blue line, you have to buy. So if you frame your trade or your setup above this blue line, and always what will be your TP1? When price closes above the blue line, it gives a high. It will give a high, or when it closes below, it will give a low. Always your first target is for that high to be taken out or for that high to be hit. That is your first target, your immediate target. If you don't get anything at all, when you get that, you should be satisfied. So what do you do? And most times the market will give you the stop loss also. The low that it gave us, okay? When it dropped down, you see this the red candle gave us a low. So that will be your stop loss. But your entry, for me like this, if I enter this trade and I see that price is constantly trying to stay below the blue line, I will not be holding the trade. Why? Because I know that below, if it keeps being below the blue line, it's going to be selling. So what I'll do is I'll keep monitoring. Maybe I'll test the trade with only one position and I'll be monitoring. Okay. But as long as it's above, I will hit it hard. So when after this bearish candle, the next bullish candle opened. This is a weekly candle and it's not too big. Consolidate, does whatever it wants to do, but it ended up closing above. But even before it closed above, if you were to go to 4 hour or 30 minutes, you would definitely find a reason for a pattern, bullish pattern that is indicating to you that you should buy. Are you getting my point? Because if a better confirmation is if you would want to wait for the weekly time frame to close above, then you can enter your trade somewhere here after the close. That's okay. Your target is just taking the high out and you got it. You got 1, 2 candles, bullish candles for that went your favor. But after that, it came back to retest the blue line. That is corrective. Indication corrective. It went up again, but after doing that, so when me like this, if I take this trade and I see price giving me, you see, price gives you a bearish engulfing here. Now it goes up again, then gives you another rejection up and gives you another bearish engulfing. The moment you start seeing this, and now it gives you another bearish engulfing that close on the blue line, and the next candle gives you, the moment you start seeing something like this, you know that the sellers are in control. Okay, but your guide is the blue line. So the moment we got a close and a big close below the blue line, this one, this is the intention that it gave us, but this is the indication itself, the big close. The moment you see this, you know that what it told you here, I want to buy, after that, I want to sell. What it told you is coming to pass. Okay, I bought, now I'm telling you I want to sell. When you see this, what do you wait for? You only wait for retest. Okay, and use the fib to measure. It came back to 38, 50%. It's so, as long as it stays below the blue line, sells. Are you guys getting my point? Are you guys getting my point?
Yes, I'm following.
Yes, but I'm missing how
Please,
you
can you
use
touch on it?
Fibonacci.
What?
I didn't get how you applied the Fibonacci now.
Oh, okay.
Yeah, it's not really clear.
So
The range you measured.
yeah. Let me put here. I told you here that okay, within a swing structure, look for BOS. Okay, one of the requirements here, you want to see rejection, engulfing pattern, you want to frame a sell or a buy. That's what we're doing. Look for BOS. Good. So on this weekly time frame, if this is a high, now we took that high out into this high. What was the low that gave us this high? That low was here. Are you guys seeing that? Now, price
Yeah.
drops to take that low out and closed below here, even this close. This is a break of structure on the weekly time frame. We sweep the last low that gave us the high. So this is the break of structure. Once we have a break of structure, what did we learn yesterday? Impulsive move, we expect corrective. That is why I use the FIB. So in this case, I will measure wherever price got to. I'll measure the range. This is my swing range, and it's around where we have our precision support. So the typical thing is I'll wait for price to come to above 50% premium to sell. But because this case, sometimes the selling momentum will be too big that price will not give you deep premium or deep discount. It will only give you equilibrium. Okay, so our precision support resistance line, we have the indication a bearish close, and our line also has confluence with the around the equilibrium 50%. So a 50% pullback is enough. Okay, is also enough for you to enter your sell or for you to trade. But the ideal thing is you would want to wait for price to come to 78.6% or 61.8% on the FIB. But if price is to come above here, it is not below the blue line. It is above. Which means if you want to be selling here, you should frame a new precision support resistance around this area. Move to the lower time frame to get into it and frame a new one before you can have confirmation to sell from there. Are you guys getting my point? Are you getting me? Am I? Are you getting me?
I'm trying to catch
I'm a
up.
bit confused about this here.
Okay, great. My God. The totally new ones will be a little bit confused, but those who have Uche, now, did you get what I said?
Hmm?
I'm saying that off around here, the pattern here, we have what we call, let me go to daily time frame and see if it will give me the same thing. Good. The daily time frame gives us good. This is a better rendition. Good. So look at what is happening. What do you make out of this? We have a high, a low, a higher high. Now, the last lower high, that gave us the high. Price drops to take it out. Is that not a break of structure? I'm asking. Is it a break of structure?
Yeah, it is.
Good.
Yeah.
So once you have a break of structure happening into a precision support resistance line, that is a good thing. One, you know that you are selling below this blue line and you are buying above it. Okay. But now you are having an indication that price wants to sell by the break of structure. So what will help you is use your FIB from the high to the low that it gave you and measure. Your goal is to look for price at premium, which is anything above 50%. But in this case, sometimes price will go up and give you the 78.6%. Sometimes it will not. Okay. But for you, you know that you want to be selling below the blue line. So once this dropped to the upside and constantly kept rejecting, see the rejections. And all these rejections are happening below the blue line. And see this engulfing. This is where you take your sell, you take your trade. So for me, if I see this, I'll be looking for sells here. But the moment I see price come above and closes above this blue line, I will not be selling again. I will rather be waiting for 78.6%. And with that, I would have to frame a new support resistance precision line above here within this price action. This thing that is happening here. I have to frame a new one up here. And I have to make sure at least I have confluence with the premium zone. The line has confluence. That will give me an early entry from above here before price comes to close below the blue line again. Then I will now have confidence that it's still going to keep selling. Uchena, are you getting the point?
Yes, sir.
Good. So we can keep watching the recording and then understand it better. If the meeting closes, we have to do another session. Okay, so please, this is getting interesting because we have a lot to keep to back test. So now we have seen why price sold here because it was below it, and that is what I want you guys to get. As long as price stays below the blue line, it should sell. Now let's keep moving. Now in the future, this is around what year? This is around 2011. Yeah, maybe. Yeah. Price came up and got a close above the blue line. This close above here is an indication that I want to buy. Sometimes and most times, if it gives you the indication, doesn't mean that once it gives you, it's going to happen. Because when you get indication, there should be corrective or retest. But once it gives you the indication and it comes and gives you a close below or a bearish pattern or a bearish move, you don't, as a matter of fact, the condition is you only buy when price is above. So after the indication, if price has not gone to close above or is not above, would you still be looking for buys? No. Okay, so it gives you an indication that I want to buy from here by this close above here. Then it engulfs to close below and constantly stayed below. Look here. Price constantly stayed below the blue line.